Hey everyone, and welcome back to Advantage Point, the series where we unpack how smarter systems and sharper thinking create strategic advantage. This season, we're facing one of the biggest changes facing accountants and small businesses in the UK, making tax digital. Now, here are a few numbers to ground us. HMRC estimates that errors cost the Exchequer nearly £9 billion a year, and MTD, or Making Tax Digital, is designed to close that gap. From April 2026, landlords and self-employed individuals earning over £50,000 per annum will need to keep digital records and file quarterly updates, not just an annual return. This means 6 submissions a year instead of one, a big shift, a massive shift for accountants and the clients. But MTD is just not about compliance. Done right, it can streamline workflows, improve accuracy, and even strengthen client relationships. So today we're asking, how can accountants turn MTD from a looming headache into an advantage? And I've got just the person for the job joining me on the call today. Her name is Wendy Tate, founder of Bean Counters, a cloud accounting practice in Northamptonshire. She's a fellow of AAT, a zero gold practitioner, and a subject expert for AAT's education system. Wendy has written extensively on MTD, hence I had to drag her on today, and bookkeeping best practices. So she is the perfect person, at least in my humble opinion, to guide us through all of this. Wendy, welcome to the Advantage Point.
Thank you, Daniel.
Good. So before we get into deadline and details, how did you first get into the world of accounting and start Bean Counters?
How did I get into it? I was working for a marketing company and put at risk of redundancy 2 years running, basically. So I moved jobs and started an admin job, and they asked me to do the bookkeeping, which I'd never done before. So I asked them if they would send me to college on day release to actually learn how to do the job properly. They agreed. So at the age of 45, I returned to college on day release, 18 exams, and 3.5 years later, I'm an AAT licensed accountant. And I've been running the business now for 11 years.
And I'm curious about the name. How did you come up with the name Bean Counters?
I didn't want the business to be about me. I wanted it to have a name that people would remember. So Bean Counters is a derogatory name for an accountant, actually. So instead of the accountant counting the sacks of beans, they want to know how many beans are in the sack of beans. So they got the name Bean Counters. So they're people who are pedantic, who want the finer details sorted. So
Sure.
I thought that's a perfect name. And also it allows me to send all my clients jelly beans on their birthday. So they all have a birthday card and a packet of jelly beans on their birthday. So it's a good marketing thing too.
Awesome, awesome. I've run into you a couple of times, but I never knew the backstory. So that's certainly interesting, certainly interesting. Awesome stuff. Okay, so let's get to the meat and potatoes, as they say. I like stats, so I'll be reeling off some stats here and asking us to discuss about this. And again, just for you guys that watch regularly, you know that I don't send a question in advance to the host or to the guest rather. So everything that Wendy will be saying will be straight from her brain, straight from her years of experience. So we'll get Wendy raw and unfiltered. And so she's on the hot seat, and I know she's going to do fantastically well. So Wendy, HMRC has delayed and adjusted MTD several times, but it's now firmly on the horizon. According to HMRC's latest plan, self-employed and landlords above 50k a year start in 2026, with those above 30k to start the following year later. So, Wendy, for listeners who might feel a bit lost in the moving dates, what's the real timetable and who exactly needs to prepare now?
If you think that your turnover for 2026 is going to be above the 50,000 threshold, that is the threshold for this year, then you need to actually get some software in place, because there is not going to be a portal for you to go on to HMRC and tap your numbers in. You're going to have to keep electronic records. And what that basically means, all of your invoices coming in and your bills, then they are going to have to be recorded electronically. And from there, you will file a return, much like the MTD VAT returns.
Yes.
that people undernard over, they stressed over, and now everyone files their VAT returns through MTD because it's just the way it's done. And I think this will follow in that suit, to be honest.
Right, right, okay. And for those of the viewers who may not understand exactly, I know I kind of recapped it in the beginning, but you're the expert here. Can you actually explain what MTD is and what it's intending to do so that everyone can sort of understand from an
Yeah,
expert's opinion?
MTD is, to give it its proper name, is making tax digital. And what HMRC are trying to do is to stop mistakes. There is no intention at the moment. I've spoken to a representative from HMRC, and there is no intention at the moment for people to to pay their tax quarterly. However, they won't rule that out. So with VAT returns, you file your VAT return quarterly, you pay the VAT that's owed in that quarter. There are no immediate plans to do that for MTDs, for income tax self-assessment. So I'll put people's minds at rest there. However, they won't rule that out for the future. The problem lies with making tax digital for income tax is everybody has their 12,570 tax allowance, unless you have an extra bit because of married man's allowance or a bit taken off because you've underpaid the previous year. That's the standard. With some businesses, sole trader businesses, their business can be quite seasonal. So they might do a lot of business between September and Christmas. And if you base their tax for the whole year around that one quarter, they're going to kind of be paying too much. So they haven't figured out a way yet to make it so that people will pay quarterly. So the returns will still be paid at the same time. You will still have the 31st of January as your payment date, plus a payment on account, and a second payment on account on the 31st of July. I can't guarantee that in the future, when all this is rolled out and it's all running really smoothly, that will not change.
Absolutely,
So,
because I noticed what you said. Oh, carry on. Go on.
So basically, for anybody who's self-assessment, and it's a turnover. This is the thing that people must remember. It's not your profit, it's your turnover. And your turnover can be vastly different to what your profit is. So it's your turnover of 50,000 that is going to be the trigger. If your return for this year is over 50,000, you will be mandated into MTD next year. You have no choice. You'll get a letter from HMRC saying you're mandated. So you'll be mandated from the 26-27 tax year. So your first quarter is April, May, June 2026. That isn't that far away. We're less than a year away now. So if you're not already using software and au fait with that software, just doing the bookkeeping, the ins and outs, you might struggle because by then you have to be doing it. So they're going to follow the same filing deadlines as they do for VAT. So the first quarter will be April, May, June. So you get a month and then 7 days to file your return. So your return will be due by the 7th of August, and that will follow on. So you get the month plus 7 days in order to, so you've got time. And the reason for that is that you might get to the end of June, but you might get some invoices in at the beginning of July that belong to June month, that are dated end of June. So they have to give you that little bit of time. The penalty regime for not filing is a points-based system that will build up. Okay. If you're late filing and then you build up these points, the points are then knocked off after a certain period of time, and you go back to zero if you then start filing your returns on time. So all you're going to have to file really is your income and expenditure for that quarter. It shouldn't be too complicated. The software manufacturers, I say this, the software manufacturers are actually getting everything in place in order to do this. What I don't recommend people do is to just go and press a button at the end of the quarter. Okay. You need to check, you need to do a sanity check to make sure that those figures are correct. Otherwise, you can be causing yourself lots of problems that come the end of the year. So there's actually 5 returns. They did originally say 6. They're now saying that there will be 5.
5, okay.
So there'll be the 4 quarterly returns that you'll have to file, pretty much like you would with your VAT return if you're VAT registered. Then The fifth return is where if you're going to file the quarterly returns yourself, which some people will, the fifth return is where your accountant gets involved, does all of the balancing, does all of your claims, your annual investment allowance, or whatever tax allowances that we can claim for you to reduce your tax bill, to then file your actual tax return.
Right. Okay. So it's
And
like the
make any
4 quarters,
amendments. Yeah.
the 4 ones, and the main one making
And the main
5,
one
basically.
will still be
Understood.
there. So the main one that you have now will still be there. These others are just on top of that.
Okay.
If you're mandated, it will be, I've got some numbers here. So your self-assessment turnover that goes into, that's in SA, the SA1 part of your tax return. So if you're filling that in and you're above 50,000, you've got SA 103F, which is your other income from self-assessment. And then the SA 105, which is the property income part of the self-assessment form, then or foreign gross property income as well. So it's not just UK income, it's foreign property income.
Okay.
If you're filling those boxes in, and it doesn't have to be 50,000 on one thing or the other, if the two add up to that 50,000, then you're mandated. If you're mandated into MTD, you have to do it. And so what happens then if that's a one-off year, it's a really good year, and after that, you're not earning the amount that you would need to be in MTD. Once you're in it for 3 years.
Okay. Wow. Okay.
So regardless. So if your turnover drops the following year, you're in it, so you're there for 3 years.
There.
Your turnover then has to drop for a certain period of time for you to be able to drop back out of MTD.
Right.
Once you're in it, I think you're kind of going to be there, because the following year, as you alluded to, the threshold drops to 30,000 turnover. And the year after that, it drops to 20. We don't know if they will bother with anybody below 20,000. They haven't indicated whether they will or whether they won't yet. But I think coming down the line, it will just be that if you're doing a self-assessment, that you're doing quarterly returns. That's my own thought, but they haven't said for anybody under 20,000 as yet.
Okay, excellent. Thank you for that in-depth answer. And just tagging on what you said, and I think you already almost like you're looking at my notes. I would say this to all my guests, like
I'm looking at notes that I've made previously, actually.
Looking at my notes, because you're kind of flowing into what I was going to ask next, but maybe you can probably elaborate on that, and I'll tell you why after I ask the question. So we've talked about, so the first correction, so thank you for correcting us. So rather than 6 submissions, is 5. Yeah. So obviously everyone take note of that.
To be fair, Daniel, they did originally say that there would be 6, and they've reduced it to 5. They've made it 5 now.
Okay. So now, can you help us and break down in plain English? And you already kind of did that already, but I just want you to kind of maybe make it a bit clearer for people who may be wanting to honing on that point, who don't know what it is and how it works. So can you kind of break down in simple English what the MTD year looks like? So quarterly update, end of period statement, and the final return. And the reason I'm asking is so help client or potential sort of business owners or clients that might get a bit confused as to how it all works. So how will they flow from one into the other from your perspective? And where do you see people potentially tripping up, both accountants and business alike?
I think for the businesses that at the moment, 2 weeks before the 31st of January, go to their accountant with a box of paperwork, no, you're not going to be able to do that. You're not going to be able to leave your bookkeeping till 2 weeks before the tax return's due, because otherwise you'd missed all those quarterly returns. For me, I think it's a good thing for accountants, because it was January for accountant. New Year's Day for an accountant is the 1st of February, after we've done all the tax returns and we've got all of that stuff out of the way. It can be horrendous, January, with the people bringing you a year's worth of stuff to do very, very last minute. It will stop that, because the bookkeeping has to be done quarterly. So you've got April, May, June, July, August, September, October, November, December, January, February, March, because we're going to the tax year. Okay, so the tax year starts in April, ends in March. So when you do your four quarterly returns, and you've done your last one for January, February, March 27,
Yeah.
so we're going away ahead now. Your then actual proper tax return, the fifth return, the bit that your accountant's going to do to claim all those allowances for you and put in all of the other income that you might have in other revenue streams that aren't included in MTD. All of that will then go on your tax return, which will have to be filed by the following January. That filing date for your final tax return hasn't changed.
Right.
But you will have had to have done these 4 quarterlies. Now, only yesterday, and this is what it's trying to stop, is trying to stop these errors where people are doing their own tax returns and they're making massive errors. And this is a case in point.
Good.
I spoke to a client yesterday who has a self-employed turnover of around 10, 11,000, and she has property income. She posted a loss on her tax return of £365,000. How do you do that when you have this small income? What she'd actually done, instead of putting her total expenses as £3,668.29, she had put them as 366,000. Move the decimal point along too. Now, the resulting that is that she obviously posted a massive loss. She would have no tax to pay. If she'd had to file those 4 quarterly things, HMRC would have straight away picked up on that. They haven't picked up on it. I've picked up on it because she wants me to do her tax return this year. I wanted to check the previous years for any payments on account, which obviously there weren't because of this massive loss. Had HMRC picked up on this in years to come, when I've redone the calculation, she actually has tax to pay of just over £1,000. Now, had that not been picked up by HMRC, which it wasn't, and she carried on filing tax returns, she would have been offsetting that loss every year against any profit. She'd have never paid any tax. But her tax bill for last year should have been just over £1,000. It's things like that they're trying to. MTD is there. It's not there to trip people up. It really isn't. It's there to make sure that at the end of the year that everything is done correctly. And it was purely the decimal point was in the wrong place.
Wow. Again, this is why. So thank you very much for sharing that, because one of the things I was trying to get the guests to do, which you've already done, is to give real life examples of what you're explaining. So like you're basically saying, really, it will stop all these kind of errors happen because you're regularly going to have to be filing your returns. So it's not going to be an end of the year kind of job thing where you make that mistake and you're rushing, so you don't get fined. But actually, because you're doing it quarterly, it's the records are tidier and it's easier and more transparent for everyone.
Because what will happen is, so the 4 quarterly returns won't be completely separate returns. So as you do the second quarter, it will be the cumulative of quarter 1 and quarter 2. And then quarter 3 will be the cumulative of 1, 2, and 3. So they can see as you're going through the year what your income and expenditure is. So then when you file the final return, all you're doing is you're doing adjustments, because there may well be some adjustments, especially if you've had sales that have ended up being written off as bad debts, or you've received credit notes for bills and things like that. So there will be some adjustments, and there will be annual investment allowances to claim and all of that other stuff. And if you've got a PAYE income as well, all that has to go on your personal tax return at the end of the year, or if you've had income from other sources like pension income. So all of that then goes on the final return. But it's just to try and stop these mistakes, which a human error, they happen, but they're costing the revenue a lot of money, and they're trying to cut back on that.
Okay. All right. Excellent stuff. Now, I was going to say put your accountant hat on, but you're an accountant. I'm going to ask this next question. So a recent survey by Xero, which you're a gold practitioner in, found that 42% of small businesses still rely on paper records or spreadsheets. Now, what's worked best for you in moving shoebox clients into digital record keeping, and where does it still break down, in your opinion?
It breaks down Spreadsheets aren't always a good way to go, because if you're not very good at putting the formulas in there, you might be adding it all up wrong anyway.
Mm.
I've had people that come to me. I had a lady come to me recently. She knows she's got to go on to MTD, and she bought me a beautiful book that was all handwritten. Her accounts look beautiful, but they were all handwritten and hand added up at the end of every column. It's human error. There's human error in there.
So how would one? I mean, you don't have to go into detail as to how you resolve that lady's queries if you don't want to. But if that kind of thing happens, what does then an accountant have to do? Manually type it all into zero? How would you resolve that?
You've got to go and check everything. So you need to check that everything's correct, but you need to check all of that against the actual bank statements. And that's the other thing that I would recommend to any sole trader.
Yeah.
Please, please, please do not put your business income through your personal bank account.
Okay.
Have a separate bank account. You don't have to pay a fortune for a business bank account. There are accounts out there that you can have with zero fees. As a sole trader, I won't advertise any because it's not my job to do that.
Sure.
However, make sure it's going into a separate bank account. Now, the reason I say this is because if you're using one bank account, you're bookkeeping your personal life as well as your business, and what a waste of time that is, because you really don't need to. The other thing is, an accountant friend of mine had one of their clients had a tax inspection, and there was £100 sat in their bank, which hadn't been put through on their sales. And when HMRC questioned it, and he said, "Oh no, that I got that money at the beginning of December. That was my Christmas present from my brother. He always gives me cash." Yeah, but we can't prove that, can we? So we'll have tax paid on that, please. Wow. So keep your personal life separate to your business life. Even if you're a sole trader, just have it in a separate account. It doesn't matter how often you want to take money out of your business account and put it into your personal to then spend it. Just take it out in chunks and put it into a personal account and do personal spending elsewhere. Just keep them separate.
Okay. And again, just still staying on that point. So if, for example, and again, probably maybe just to probably explain, if like you talked about someone comes in with a set of accounts that's all handwritten, so whose responsibility is it, in your opinion, to get that into a digital format to basically do the bookkeeping on?
I'm quite happy to put it in. I can put it into a digital format quite easily, because I have some software that can extract the PDF bank statements into a CSV file, and then I would put it into Xero and I would do the bookkeeping from there. However, happy to do that, but ultimately, always, without exception, the client is responsible for their tax return. So the accountant can do the bookkeeping, they can prepare the tax return, but the client has to sign to say that the information that they've given that accountant is correct and accurate.
Correct.
So it's no good somebody going to the account, going and say, "Well, it's my accountant, it's down to my accountant. They filed it." Doesn't matter who files it. It's the person whose tax return it is who's responsible for the figures, ultimately.
Understood. Okay, and here's a follow-up question. So do sole traders and landlords face different hurdles, especially around property income reporting? Because there was a bit of that in what you were talking about earlier on with that lady you mentioned. So are there any sorts of different hurdles for sole traders and landlords in terms of property income reporting from your perspective, or do you foresee any challenges?
But property income, the big thing that people seem to forget is that you can only claim if you've got a mortgage on a property, buy-to-let mortgage, you can only claim 20% of the interest part of that mortgage. You can't claim it all. You can't claim any of the capital. If you're paying a repayment, if you're paying interest only, you can claim 20% of that. If you're paying the capital, you've got to split it out, and you can only claim 20% of the interest part of that mortgage on your tax return. So that can be an issue, because people don't always realize that. There are other things that you can obviously claim for: any repairs and maintenance, insurance, making sure your gas safety checks and all of that sort of thing are in place. But there are companies out there to help you manage if you've got a rental property, there are plenty of estate agents and letting agents out there that you can get to manage your rental property for you and do all of the bits that need doing and make sure that you're actually legally compliant.
No, that makes lots of sense. That makes perfect sense.
Apologies.
That's okay. That's okay. A woman in demand. That's
No,
perfectly fine.
it's an alarm, actually. Sorry.
It's all right. No worries. Okay, so ICAEW has warned that quarterly reporting could double or triple touch points between accountants and clients.
Yes.
How has that changed the rhythm of your work, and what's your go-to routine to avoid the end of the quarter scramble? I mean, from what you're saying to me, it's quite clear that you're on the ball, but I'm sure I'll let you expand a bit further.
It is going to add an end of quarter scramble. You're absolutely right, because unlike with VAT, where people's VAT quarters can end in any month of the year, most people align them with their year ends, so they could end any month of the year. The tax returns, these quarterly returns, will all hit at exactly the same time for everybody. So it will.
Wow.
So everybody's will be June, August. They will all be at the same time, so that there will be no drip feed through for accountants. It will be those quarter ends are rigid. So it will add work for the accountants if they're doing the bookkeeping. To me, there will, if accountants aren't doing the bookkeeping quarterly now and getting all that work in January, it will increase their work through the months, but it will decrease their work in January because they've not got the whole bookkeeping to do as well as doing that year-end return. So you would hope it would smooth the workflow through the year rather than it all being lumped into January.
Sure.
But it's chasing the client and making sure that, they are giving you the work, the stuff that you need to do in order to do those things. But there's plenty of ways of doing that. I mean, there's plenty of software out there. I can name two. Dext and HubDoc would be two. Where all the client actually has to do is every time they get a receipt for their business is take a photo of it in those apps. That is then uploaded straight away. That enables them to be compliant with what they should be doing anyway, which is keeping any paperwork for 7 years. So it's 6 years plus the current financial year. So keeping it in digital format, having photos of those receipts, rather than them just being on that thermal paper, which fades after a couple of years when nobody can read them, I think will be useful rather than a hindrance. And if all the client has got to do, instead of shoving it all in a carrier bag and taking it to the accountant at the end of the year, and the accountant filled with dread at these carrier bags full of stuff, if they're just taking a photo of it and uploading it, the accountants and bookkeepers can easily do that bookkeeping for them if they don't want to do it themselves.
Right. No, that makes sense, yeah.
So to me, if you're organised and you're already using software, you've just got to organise those months. Instead of having a quarter end scramble, get the bookkeeping done monthly. Then, but at the end of the quarter, it's there, isn't it? It's done.
Yeah.
So there are ways to mitigate the end of quarter scrambles, but that's reliant on the cooperation of your clients. Because if they don't get you the paperwork, you can't do it.
Of course.
So it's reliant on them and having procedures in place to chase them and make sure that, that they are doing what they need to do.
Right. Okay. And actually, you're touching again on my follow-up question. I think you've answered it already. So I was going to say, so do you find that reminders to clients might help them to prompt them to get you what you need to be able to, or an accountant in question, get them what they need to be able to do the bookkeeping? You feel reminders might help, given that clients sometimes busy?
But the other thing, as well as it being more work for accountants through the year instead of just doing it at the end of the year.
Yeah.
It's got to be better for the client, because what is the point? And this is a case in point. My very, very first client came to me with his carrier bags, literally carrier bags and shoe boxes. There you go, Wendy. Off you go. Tell me how much money I've made. I had to unfortunately tell this guy that at the end of his first year in trading, he thought he'd made money, but he'd made a £3,000 loss. He'd basically been a busy fool. And the reason he didn't realise this was because he had done biggest no-no that I've just mentioned. His personal, his income and his expenditures was going in and out of him and his wife's joint account. So were his wife's wages. So his wife's wages were masking the fact that he was making a loss all year. So by filing these returns quarterly, it's going to help the actual individual sole trader to be more on top of their accounts and to know if they're making money, and to, if things aren't working, that they can change it up. They've got a quarter. All they're looking at is the last quarter. How have I done? Am I making money? What do I need to change to if I'm not? And how can I increase it if I am? But leaving it to the end of the year is too much guesswork in my book.
Sure.
So I think it will help sole traders in the long run, to be honest.
Of course. And hearing you talk has actually made me think of a question that I actually haven't gotten down here. But I mean, I know you're quite softwared up and you're quite good with that. But if you take an accountant where they're not sort of as automated or as softwared up as you are, how long would you say on average, and again, probably I'm asking here how long is a piece of string, but how long would an accountant take to basically go through an average an average client's returns? Like, how much time do you think that might take if they don't have the tools or software that helps makes it a bit more seamless and easier for you?
It is like asking how long's a piece of string. Really. It depends on the client. It depends on how many ins and outs there are. I mean, if you've got a client with 20, 30 transactions a month, that's not going to take as long as somebody with 300. It's sort of, but because I've come to accountancy later in life, as it were, I've started from day one on this digital route. I decided very early on that I was only going to use Xero. I liked Xero. There are other softwares out there and some people prefer others. But I didn't want to be a jack of all trades. I wanted to niche. It was only me. It takes about 40 hours of training to get your Xero certification. It's quite a lot of work to get that certification.
Sure.
I haven't got time to be doing that over lots of different softwares. So I made that decision. Accountants that aren't currently using software need to get their heads around software.
Right.
A few years ago, I was the chair of the Northampton branch of the AAT, which is my governing body. And when MTD for VAT was coming in, there were two guys there who had always done everything paper-based, and they retired rather than seeing MTD for VAT through. And I think there will be those accountants that really can't get their head around software. They've never used it. They've always been very paper-based. I think some of them will decide to retire rather than learning software basically. Because it's quite a big ask.
Of course. And kind of leads me to my next question, really. So I would imagine that many firms, I mean, in light of MTD, that many firms, accountancy firms, are rethinking pricing because MTD creates basically more submissions per client. So from your perspective, how have you approached pricing so it stays fair to clients but still sustainable for your practice? And you don't have to give us the ins and outs. Or what's your philosophy? Let me ask it that way. What's your philosophy in terms of approaching pricing?
Would be, my philosophy would be the same as if I'm doing a VAT return. If I've done the bookkeeping, I will file the return, and I don't charge extra to file a VAT return if I've done the bookkeeping for that quarter. I think what will happen is accountants will start to collaborate more and more with bookkeepers. And what HMRC have said is, at the moment, you have an agent for your PA, for your payroll, your VAT, and you can only have one agent. If another agent applies to be the agent, it knocks the other one off, basically. So you can only have one agent. What HMRC are looking at doing is allowing people to have two agents. So they'd have their bookkeeper that would possibly do the bookkeeping and file those quarterly returns. Then that may well then be handed over to the accountant at the end of the year to do the corrections, because there's bound to be some. And that's not to say those people have done the work wrong, but if there are bills that never got paid or things that have had refunds on after they've been filed. There will be adjustments that there just will. That's life. And they would do the final tax return. If they're just doing that final tax return, I don't see why their fees need to change from what they already charge. If they're taking on the bookkeeping, then it's negotiating a fee with those customers for the bookkeeping charge and filing those quarterly returns. But I think there'll be a lot of people that will, a lot of accountants don't want to do bookkeeping. They don't want to touch that minutiae. They want to look at the big picture at the end. So I think there will be a lot of people collaborating between accountants and bookkeepers. So bookkeeper will do the bookkeeping and they hand it over at the end of the year. I think that's what will happen quite a lot.
Yeah. So effectively what you're saying, not putting words in your mouth, but potentially there may be where accountants would have to subcontract the bookkeeping to bookkeepers.
Possibly, yeah. I mean, in some cases, I mean, some accountants work with bookkeepers anyway. They don't like doing bookkeeping. Yeah. They will do the year-end accounts, but they don't want to touch the bookkeeping. Or they might have a bookkeeper in-house if they're a larger company that does that bit. But you don't usually find. I mean, I personally, I'll do both. But I do some work for another accountant where I do the bookkeeping and then hand it over to him to do the year end. So there will be more collaboration, I think, between bookkeepers and accountants.
Understood. And from your perspective, do you think clients yet understand the extra work that's going to be involved in doing this?
I don't think they all do, no. I've written to all of my clients. I wrote to them all in April of this year to say, right, we've got a year. If you're going to be over that threshold, we need to. But I have all my clients on software anyway. If they have, I have one client who's a lady in her 80s and she doesn't know how to use. She's not interested in using the software. She will give me all of her bank statements and I will import those into Xero to then do the bookkeeping. So the bookkeeping is still electronic. And that's the way I work rather than sitting there, adding stuff up, which then you add up the same column 3 times just in case you've got it wrong, don't you? I do. But if you put it all into the software, the software's done it, you can also produce a nice profit and loss and a balance sheet for them. And, and it all looks very professional. Even if people give me paper, they get it back electronically.
Right. Understood.
But saying not all accountants work that way, but they're going to have to with these people. It's just going to have to change.
Sure. And you've mentioned previously, again, that you're a Xero Gold practitioner. Partner, not practitioner. I don't want to keep saying practitioner. Gold partner.
Yeah.
So, and like you've said, that you've long since championed cloud accounting. So from your perspective, for a small business starting, and I'm going to ask this 2 ways. So for a small business just starting, what's kind of like the simplest software? I call it a tech stack. Do you know what I mean if I say tech stack?
Yeah, I mean, obviously I'm going to say Xero, aren't I?
Xero, yes. Oh, yes, I knew that was coming. Yes. What else apart from Xero?
I personally only use Xero.
Okay.
There are other softwares out there. Depending on who you bank with, there's one called Free Agent.
Yes, I've heard of that.
If you bank with NatWest, you can get that free. So you're not paying a monthly subscription fee for that. Sage, in my opinion, is behind the curve because Sage was always a desktop system and it's gone digital. Xero started as a digital platform. It's never been a desktop version. It started as a digital version when it started. I've been a Xero advisor for 11 years.
Okay.
And it's so you got there's horses for courses out there. There are plenty of softwares. I'm sure QuickBooks will also have an offering for sole traders and Xero, and then Sage, and so there's various ones out there. The first thing you need to do is find an accountant that you can work with. Find somebody that you can work with, and that people buy from people at the end of the day, and see what they recommend. Because it's no good going out and starting if you're starting up. Taking the software that's going to be the cheapest and the accountant that you want to do these returns for you doesn't support that software. So not all accountants will work with all softwares. I have ones that I just won't work with. So yeah, have a word with if you're just starting, have a word with your accountant, decide who you want to be your accountant, and have a conversation with them on what software they recommend to you. So your software stack should be your bookkeeping software, whether that's Xero, QuickBooks, whatever it is you decide to use. The other stack you need is somewhere to digitally hold all the pictures of your receipts, of your bills. Now, there's Dext, which a lot of people know about. Dext, there is a fee for. If you're using Xero, however, Xero has their own add-on called HubDoc, which is free. So that's the other thing to consider. You might get a special offer earlier on. What is going to be the overall cost to you? And then there's other tech stacks that people might put in with that, depending on what their business is. So there's a marketplace within Xero, which is a bit like the App Store on Apple.
Of course, yeah.
And there are over 800 apps that will link into Xero. So if you've got a specific business, landlords, or sometimes the builders will use it because they can have project management to project manage each building project separately. So there's loads and loads of things out there. But I would recommend speak to your accountant, see what they recommend. There's no point reinventing the wheel and going for all these texts if you're not going to make good use of them. Because it all adds to the price before you even start with paying accountancy or bookkeeping fees. Another one that people, if they've got a lot of invoices going out there, is Chaser, and Chaser is an automatic app that will do your credit chasing for you. So there's lots of stuff out there that can support you in your small business, but don't go gung ho and I'll have this, I'll have this, I'll have this. And find that actually you don't need all that stuff. Speak to your accountant and see what they advise.
Yeah. Awesome. And my final question to you would be, if you could wave a wand and automate, one MTD task tomorrow, or let me put it this way, because I know I'll ask it in two parts. So for you personally, if you could wave a wand and automate one MTD task tomorrow, what would it be? And then, answer that first, and I'll go to the other one. Yeah.
It wouldn't be the task. Yeah. It would be, if I could wave a magic wand, it would be that all clients would upload their receipts as soon as they get them. Now, I do have lovely clients that do that. For example, I've got one guy. He's always out and about on the road, and when he has a fuel receipt, he gets it back in his car. He puts it straight on his lap and takes a photo of it. And I always know if it's a nice day because he's got shorts on. I like to get a photo of his knees as well. That's the bit that I would wave a magic wand, is to get, if clients were more organized in what they do, it would make our lives a whole lot easier. So that's the magic wand that I would wave.
Put on you. So imagine you're not yourself, where you're kind of, you've got your tech stack that works for you. For the accountant that is not really, maybe they might use Xero, but maybe not, because you mentioned a couple of other software as well there. But where would you, if you were them, that you weren't sort of as automated as you were now, what pain points do you foresee those accountants having, and what would you say, or what would you recommend? Say, well, actually, this can make your job easier if you could automate in this way or that way. Imagine you're not yourself, but the average accountant out there.
The pain point is if they're not currently using software, they're going to have to start.
Yeah.
There are accountants out there that still just do get everything in through spreadsheets. And as long as the clients put it all in a spreadsheet, it's okay. All of these softwares, they are all good. They all serve a purpose, but they're all different. So the pain point to me is, if I went into QuickBooks to look for the reports, they're going to be in a different place as to where they are on Xero or where they are on Free Agent. And if you start to let, this is just my opinion, if the client dictates the software, and you then have clients on lots of different softwares, it will slow you. The pain point, it's going to slow you down, because where is it in this one? And you're looking for the same information in different places and in different softwares, which is why a long time ago, I decided on which one I liked to work with, and I stuck with that one. So that will be a pain point, I think, because, it's like cars, isn't it? They're all
Yeah,
slightly different in how they work.
sure. Awesome. Wendy, this has been fantastic. Time has absolutely flown by, and I was trying to keep it within 40 minutes, but we've gone over.
We have gone over.
Yeah, we have. Yeah, see, I told you wouldn't notice. But before we close, what are the 3 practical things you'd want every accountant or small business owner, well, in this case for NTD, property companies or sole traders? So what are 3 practical things you'd want them to know who are listening today to remember about preparing for NTD?
Number 1, make sure you're using a separate bank account. Number 2, use a software that your accountant that is happy to work with as well. And number 3, don't leave the bookkeeping to the end of the quarter, because you've got to remember what all those transactions are from 3 months ago. If you've got a lot, do it weekly. If not, do it monthly. But just getting to the habits, because that for the people that are just taking the receipts to their accountant at the end of the year, this is going to be a real big step change for them, having to do their bookkeeping throughout the year. Little and often, do it little and often. Don't make it a big job at the end of the quarter and then sit there panicking, because you're going to sit there until midnight because you've got to get this done to get it filed.
Sure, awesome stuff. Wendy, thank you again for joining us. For those listening, you can learn more about Wendy and Bean Counters at her website or look her up on social media. And again, if today's conversation raised questions about how your firm can streamline entity compliance from digital onboarding to quarterly submissions, here at Optimus 7AI, we're helping firms build simple, reliable workflows that take the chaos out of compliance. Again, thank you to our guest. I told you that you'd have loads of pointers and loads of experience to share with all of us. So thank you again, Wendy, for being a guest. And that's it for this episode of Advantage Point. So again, if you found this useful, share it with your colleagues and subscribe for more deep dives on what the best firms like Wendy's are doing differently in 2025. And until next time, thank you for tuning in and take care. Bye.